Hello, everyone. This is Brandon, your trusted realtor, and I'm coming to you with another great episode. Today, we are honored to have JD from First Savings as our special guest. As our special guest. I'm a little tongue tied today. And today, I want to spend a little bit of time demystifying a very important conversation, which is repeat buyers. JD, how are you doing today?
I'm wonderful. Thanks for having me today. How are you doing today?
You know what? If I was doing any better, I don't think I could stand it. So thank you for asking. So you do a lot of work in not just DC or Maryland, but in DC, Maryland, and Virginia. And one of the things that stuck out to me was I opened my email one day and I got a video message. It was a videogram, right? It was like your own personal personal telemessage, right? And it said, "Hey, did you know that as a repeat buyer, you are able or eligible for to qualify for additional down payment and closing cost assistance?" And I thought, well, this is probably something that is going to be very interesting to a lot of people. So I want to set the stage, if you will, for everyone that's listening. What is a repeat buyer by definition in the mortgage arena?
A repeat buyer is someone who has owned a home in the past 3 years. So take a step further back. A first-time home buyer is considered has not owned any land or property or had anything in their name in the past 3 years. So if you've owned a house 4 years ago, 5 years ago, 10 years ago, but have been renting since, you are not a first-time home buyer. You are not a repeat buyer. So we're really talking about those who've owned a home or maybe currently own a home and planning on selling within the past 3 years.
Awesome. So now that that's clear, so let's say I'm a person and I was a first time home buyer. I bought a home, and for whatever reason, I had to sell that property. And people's lives change for different reasons, and things happen. So it could have been for a life emergency, and I had to sell the property within maybe the first 6 months, and I wasn't able to net the maximum amount of proceeds, or whatever happened in life. So that person was forced to sell their home. And so, but they want to buy a second home or another home, but they know that they are not a first time home buyer. So they don't qualify for that down payment and closing cost assistance that's available across our region. How would they then access those funds if they sold a house, but they didn't get all the money they needed for a new down payment?
So that's a great question. So in Maryland and DC, the programs are really easy and they're tailored to that. Virginia is a little bit more difficult. We'll get to that a little bit later, but it's still open to some repeat buyers. So best way to describe this is a client that I just closed last month. They were forced to sell their home, or it wasn't forced. They just bought a home that wasn't the right fit for them. It was a money pit. They were throwing more and more money into the house. And finally they decided, you know what, it's time to cut our loss. They walked away with, I'm not kidding, $1,600 was how much they walked away with. They were just happy to get rid of it. Yeah. They'd been renting for the last month or yet last year, and came to me and said, "Hey, we really want to buy, but all these lenders are telling us that we need 3% down to make this work, but we just don't have it, so we think we may be another year away." And I said, "No, wait, what is your income?" Asked a bunch of questions, and we found out they qualify for the Maryland mortgage program. And in essence, what we did for them was we got them a grant equal to 4% of the first loan amount. And that was able, combined with some funds from the seller and a gift from some family members, for them to qualify to purchase a house of their own. And the strange part was their new mortgage payment was less than the rent that they were paying currently. So this was overall like a great thing. They were like, whoa, we're actually going to be able to afford a house that we actually want to live in, put a little bit of money down into it, and have the monthly payment less than what we're paying currently. They're like, we're all in. And this was after they spoke with 3 other lenders who said, no, you can't do this, and you can't do this, you can't do this.
So, and you know what, that's a powerful point that you end on. One, I'm sure you're their new best friend, right? I wouldn't be surprised if like the next kid, you're the goddad, right? The second is, how is it that your company was able to create this distinction or this avenue for success for these clients? And the caveat I would give is, one of the things I always, and my clients know, if you guys are listening out there, you all know the thing I say is that whenever you get pre-approved, you want to talk to multiple lenders, because every lender is different. And it's like having a fast food experience. Just because you go to that one restaurant in Northwest, it doesn't have the same kind of taste as if you went to like a Baltimore, etc. So why is it that you guys in your establishment at First Savings were able to offer this service that other lenders weren't?
I think part of it is that we have decided to be partners with all state agency programs. So we partner with Maryland Mortgage Program, DC Open Stores, and Virginia Housing to offer all their products. Why? Because we want to be a good part of the community. We want to be a good member, and people need access to state agency funds. Last year, during the COVID situation, a lot of lenders decided we don't want to participate in the state agency programs. They require a lot more paperwork on our end than it is on the buyer's end. And it is a process that takes a little bit longer than normal if you don't know how to get things through. And the other thing too is they stay on, this is going probably too deep into the thing, is they stay on your books a little bit too long before they take them over. So it holds back their ability to do other things. So this is really important, why you should talk to different lenders. Different lenders have different products, they have different ways of thinking. Maybe they're going to see something that someone else completely doesn't. For example, I had a client just the other day, had spoken with two lenders. They said to her, we can't get this done. And I looked at it, said, give me 24 hours to think about it. And I came up with a solution that no one else had thought about. And they were able to put the offer on the contract to do it. So sometimes it's the offerings. It's also just sometimes people are looking at things differently. So it's really important, particularly if you get a no, to definitely talk to other people. But even if when you get a yes, talk about your different options, because maybe someone has an idea that will probably result in a lower payment, maybe lower cash to close, or maybe just put you in a better overall position for the long-term mortgage.
And it's really interesting that you say just talking to other lenders and being in the best position. Like, I want to kind of like set the stage, because I'm sure there's some like naysayers saying, well, they probably were denied because they didn't have the optimal credit or situation. I really want to kind of let's talk about the overall mortgage environment. Compared to 2006 and 2007, where we saw people who were receiving subprime loans really didn't qualify. Today, that's based on my own personal portfolio. I can tell you that's not the case. I can tell you that folks are coming in with really good, high 600, 680, 690s, and then in a lot of instances over 720 credit scores with high five figures, six figures of money in the bank as far as cash reserves. Some instances, which we as realtors love, all cash offers. So these are individuals in today's market that are highly motivated or highly qualified. Are you finding the same thing?
Absolutely, but I go back to the client that I was talking about, or who used the Maryland Mortgage Program. He had a 642 credit score. So he didn't have the greatest credit in the whole entire world. He didn't have the things. They had a limited amount of assets, didn't have really the greatest credit, had a solid job with a city. So I would say, yes, you would see all different spectrums. It is a little bit tighter if you have below 640 credit score, not impossible. But I think 640 is kind of the cutoff to getting things. But going back to a question about subprime doesn't exist anymore. It was eliminated with the last financial crisis. And we have put in a lot of safety bureaus to make sure we do not ever go back to where we went beforehand. We have things called ability to repay, where we're really looking to see your ability to repay the mortgage that you're currently getting. We look at resource a little bit more funds, a little bit more. So it does take a little bit longer and maybe a little more intrusive, but we are making sure that our economy does not ever crash again because of mortgages or a housing situation. So I think those who should be confident that the mortgage industry has learned from their mistakes and will never go back to what we were, let's say, 05, 06, 07.
And how have you found that those expanding your relationships with federal agencies, local state governments, DC, Maryland, Virginia, has helped you in being able to bridge the gap, as the resource gap for your clients?
One of the things I tell people is one of the joys about my job is it's one of the few professions you help people accomplish a major life goal. Like, it's the most rewarding thing to help someone get keys to a home, because you're creating a sense of community, you're creating stability for a family, you're creating generational wealth, right? It's the great wealth in our country is driven by real estate.
Mhm.
And so it's a rewarding on my behalf to do this job because I help people accomplish a life goal. And so I connect that to these agency programs are there for people who have trouble, who are lacking the funds for down payment. And so if you have a down payment, these programs probably aren't the right programs for you because the interest rates are a little bit higher than if you didn't. But if you don't have a down payment, this should not be the barrier for you to owning a home, right? There are programs out there to allow you to do it. And that's why we partner with them. We want to be a good neighbor. We want people to buy into the American dream and start generational wealth. And so that's why we partner with them. It's because not everyone needs them. And I'll be blunt with sometimes to people, you don't need this program. It sounds great, but if you do need the program, they're available for you. And so for particularly repeat buyers, I think there's a lot of people out there who call these first-time homebuyer programs. That's not the right phrase. They're down payment assistance programs because it's helping people who have owned a home in the past and at time of closing will not own a home get down payment assistance to buy their first home or to buy a home.
Perfect. And with that, that's a really good segue into each of the localities that you service. So can we talk about DC specifically and the DC program? What is that program called? And what are some of the requirements if someone is a repeat purchaser and they want to participate in that program?
So DC's program is called DC Open Stores.
Okay.
It's offered from DC Housing Finance Authority. It's pretty easy program. I like to use a $100,000 house. So you are going to get either a $97,000 first mortgage or $96,500, 96.5% or 97% mortgage, and they're going to give you the gap financing, 3 or 3.5% towards there. So that's 100% financing. So for your payers, really important, cannot have any properties or land in their names at the time of settlement. You could settle the day beforehand on your house and use this program. So that's the key of it. You could close 1 hour beforehand, but at time of closing, you may not be eligible to own any property. So that's report number 1. 2, minimum credit score 640. 3, have an income under $151,000. So really high up there, right? This isn't for low income people, minimum people there. And that income is only borrower income. So if your spouse isn't going to be on the mortgage, if you still as the borrower only make under $151,000, you can use this program. So it's what we would describe as gap financing, meaning it's going to fill the gap between the first mortgage and the sales price in terms of giving you a second mortgage.
Okay. And now, is this going to be a grant or a loan?
This is a loan. So
Okay.
I've used the term first and second, and the best way to describe it is when you buy a house, you get something called the deed. The deed is your ownership of the property. You're going to place that deed up as collateral as the mortgage, similar to a car loan. You'll put the car title up. The first mortgage is in the first position. The second mortgage is in the second position. So this is a second mortgage. It's got a 0% interest rate, but it's never forgiven, and no monthly payments are required on that second mortgage. And it only gets repaid.
Oh, I think you're about to answer the question about repayment.
Yeah,
Go ahead.
it only gets repaid upon sale, refinancing the first mortgage, turning into investment property, or 30 years. So it is never forgiven, but it is only really expected to be back when you sell, refinance, turn into investment property, or if by some chance you live into this primary residence for 30 years, it will come due in 30 years.
Got it. Okay, good to know. So let's move to the Maryland program. Talk to us about the Maryland program and the requirements there. I just sold my home, less than 3 years out. I need the down payment assistance because, like you said, it was a money pit. I got $100.
Yeah, they've got a couple different programs that are floating out there. But the basic program is equal to 3% of the first loan amount. This is different than DC. Okay. DC was 3% of the sales price. This is 3% of the first loan amount. Yeah. So on that $100,000 house, you get a mortgage for $97,000, second mortgage of $2,910, and down payment of $90.
Got it. Okay.
So it's a little more confusing, but what I would say is you probably need about $100 for every $100,000 that you're purchasing for down payment. The income levels are based upon where you are in Maryland, that county, and the number of people in the household. So, but in Maryland, Montgomery County, PG County, Calvert, Charles, it's $154,800 for 2 people and $180,000 for a household of 3 people.
Got it.
They are a little bit more strict. It's household income. It's not borrower income like DC.
When does the count of household individuals begin?
When
someone is a husband and a wife and they're pregnant.
That would be 3. That would be 3.
That would be 3? Okay.
Yes. They actually strangely have a document which you would get filled out by your OBGYN saying that you are due, and they do count that as a person, so you would get the higher income limit.
Good to know.
But flip side is, if you have a 19-year-old that is not in college who's still living with you, their income does count towards the household income.
So if they're employed.
If they're employed and not in school,
okay,
it counts. If grandma is living with you, grandma's income would count.
Even if she's receiving Social Security or disability.
Yeah.
Okay.
So you do have to be kind of careful about who is going to be living in the house because that income will all be counted.
Got it.
Again, minimum credit score is 640. They offer FHA and conventional mortgages, so they have both different options. And they've got other programs. They've got a 3% grant program. They've got a 3% loan program, a 3% grant program, and a 4% grant program. Okay. So tons of different programs. The grants are completely forgiven. The loans are repaid upon sale, refinance, turning into investment property, or 30 years.
And I know the obvious difference between the grant and the loan, but why would anyone say, I got an apple and I got a cactus. Let me choose the cactus. Why would someone choose the loan over the grant?
The interest rate.
Got it. Good to
know. Interest rate is cheaper than for the loan versus the grant, 3% grant versus the 4% grant. Mm-hmm. But the client who I was talking about, who I helped just last month, they went with the 4% grant. They didn't care what their monthly payment was going to be. Mm-hmm. But they were like, whoa, we get 4% completely forgiven. And in 6, 9, 12 months, we get to refinance the mortgage without having to owe anyone. So sometimes if someone could qualify for the 3% grant or 4% grant, I would consider doing that, because in essence, it is free money, even though you're taking a higher interest rate. And at some point in time, you can refinance. Maybe if you're in an FHA mortgage, moving to a conventional mortgage.
And that what you just said was one of the most powerful things about really why I started this channel and why I have these discussions with professionals like yourself. Is that real estate is all about planning, and it's about creating a strategy that works. Just because you're a street person, your next door neighbor qualified and got into a home using or paying $500 using HPAP, that doesn't mean that's going to be everyone's story. And you could actually be setting yourself up in a negative way by wanting to replicate the exact same approach that somebody else used when there's potentially a better option for you. And it all comes with knowledge and having the right people or the right resources like yourself at First Savings and myself, who can kind of guide you on that program.
Absolutely. It's a conversation, right? Like the way that you know if the lender is right to work for you is how deep of conversations are they having? Are they asking what are your 5, 7, 10-year goals, right? How long are you going to be in this house? If this is a studio apartment, they're probably not living in this house for long term, right? Yeah. Like this is not going to be the whole thing. So then I would have the conversation saying, whoa, okay, if you're not going to sell in 5 years, understand you need to be prepared to pay this money back. Or if you're going to turn to an investment property, you need to start saving money to pay this money back. So part of the conversation really needs to be about how this house fits into your long-term financial goals, because this is what it is. It's an asset. It is what is going to allow you to buy future homes. It's going to allow you to retire. It's going to allow you to pay for your college education for your kids. So having deeper conversations than how much do I qualify for? What is my monthly payment going to be? How much do I need for down payment? Those are, anyone could help you with those conversations. But what I pride myself is I want to know a lot more about you. I want to know how this fits into your whole financial plan and your long-term financial plan.
Yeah, because it's about helping people, empowering people with the information so they can build wealth for themselves and their families.
Absolutely, right? Like, ignorance in this process is not helpful. Just, you can't go back 3 years after you buy a house and like, oh, I wish I would have known that beforehand. No, there's no take back. You can't return this to Amazon. You can't return this to Walmart or anything like this. This is the biggest financial purchase you will probably ever make. So
Agreed.
take the time to dig through the information and understand, ask the questions so that you can make a decision that's right for you and your family.
I had a client actually on Friday, to ask me, "Oh, what's your favorite part of the process? Is it the negotiation?" As we were negotiating, talking about the terms of the contract, and I said, "Absolutely not." I was like, "You can negotiate anything. I can go to the grocery store and negotiate the price." Like, I was born with that gift. I said the most important, the highlight of the transaction is once I start saying things to someone and words come out of my mouth and they are able to digest those and they can send them back to me. And so we were talking on Sunday and she was texting me as we were texting back and forth about the offer. She was like, I just want to be conscious of what our due diligence is so that way we are, and I fell in love with her response because I was just like, this is what I said, back to your question. This is what makes me happy. It's the fact that you understand what due diligence means and what appropriate steps and analyses you need to be performing as a buyer, especially a first-time buyer, to purchase a $500,000 plus property is significant, especially for someone in their 20s in this region. So it really is important to make sure that you have that foundation and that information. So because you can't go back, like you said, 3 years and say, man, I really wish I, senior shoulda, coulda, woulda.
Absolutely. And the other thing I say is for with repeat buyers, the process has changed dramatically, even in the past 3 years. Of the process of putting contract in, getting pre-approved, putting contract in, going through underwriting, getting an appraisal, all that is the same. But a lot of the nuances has changed dramatically. COVID changed a lot of the way that we do business. And so I would say is even if you are a repeat buyer, ask the questions. Don't assume the same process is going to happen last time is going to happen this time. And maybe you learn from the mistakes that you made last time and you start asking a lot more questions. Because for me, I love when the light bulb goes off.
Yeah.
They just are like, whoa, now I understand this whole thing. Or okay, now I understand why you're asking that question. Because now it's like, okay, I get it. And they feel confident about the decision that they're going to make.
Exactly. So let's shift over to Virginia because we have one more jurisdiction. I think a lot of people are intimidated by Virginia. They think if you don't come to Virginia with the money or guns, you can't play. But that's actually not true at all. Virginia Housing Department has a really spectacular program. And just kind of what we talked about earlier, a lot of lenders are just not as familiar with that, nor do they partner with Virginia, the government agency, to really execute these programs. Tell us a little bit more about them.
Yeah, so I actually purchased my first home with the Virginia Housing Grant. So I know this program very inside and out. They are a little bit weird. They do not have a program for repeat buyers on the basis. However, if you own a home that you've never lived in, like I have a client who owns 3 rental properties in Alabama, he is eligible as a first-time home buyer because he has not owned a primary residence in the past 3 years. So really, really kind of important. So if you own a property at the moment that you haven't lived in, maybe you inherited it from a family member, maybe you own a rental property or something like this, you can use the Virginia Housing Program. Similarly, if you buy in a targeted area, which is getting a little bit too deeper, the first-time home buyer thing is waived. So definitely it's open there. They have 2 products really. One I use, which is the 2% grant. So $97,000 first mortgage, 2,000 grant, $1,000 down payment. 97, 2%, 1%. Great, completely forgivable. Love it. Get a mortgage credit certificate as well. And so great program.
I know, sorry to interrupt. I know Maryland, they either stop the mortgage.
Maryland and DC do not have mortgage credit certificates.
Good to know.
So they think DC's will be back. It's stopped before. They're just out of money. So usually it kicks back in the next year. Mortgage credit certificate, if you have the ability to get one, unfortunately, mortgage credit certificates are only for first-time home buyers. You can't get one as repeat buyers. But if you have not owned a property in Virginia, or primary residence anywhere, you may be eligible for a mortgage credit certificate in Virginia.
Wow.
They're a little bit weird about things. But if you also buy in a targeted area, sometimes you're eligible as well. Not a ton of targeted areas in the Northern Virginia, but there are some places that you'd be shocked that are targeted areas. They're new construction that are popping up. But the second program is they have what we call 101.5% financing. So yeah, kind of crazy, right? $100,000 house, $97,000 first mortgage, $4,500 second mortgage. So you're covering all your down payment and 1.5% of your closing costs.
Okay.
But it is fully repayable. You have to pay it monthly. But I have a client right now. He's figured out, instead of cashing out stocks, and at the moment where the stock market's doing well, why don't I take the second mortgage? I can pay down that second mortgage once the stocks start to go down. I'll cash out, pay it down, and I'm no less for the situation. So definitely two different options there. One is a grant. One is a loan. A third crazy product that they have is for veterans. If you have not used your benefits yet, they've got a 2% grant towards closing costs. So you'll use your 100% financing to get the mortgage thing, but they will kick in 2% towards closing costs.
Oh, so and for a lot of individuals, you're probably thinking, so, what's the power of that for veterans? The VA guaranteed loan is essentially the only real true remaining type of 0% down payment loan. So they will cover all the costs. And usually the veteran is responsible for the funding fee, which is a percentage of the cost for using.
But that really does get rolled into the loan amount.
For the loan. Yeah. And there's closing costs, which are very typically minimal on most parts. It's almost equivalent in most instances to the payment.
Pretty much, it's really affordable, but they will kick in some money towards closing costs. So in this hyper competitive market where no one's giving closing cost help, VHGA could step in to help out.
If the loan is structured or the terms are structured properly, would that program could potentially result in the buyer getting money back at closing, or is that prohibited under the Virginia program? They
can get their EMD back.
Just the EMD. Okay.
Correct.
So the amount they can get up is up to the EMD amount. Okay.
Correct. And then, but if you have condo fees or HOA fees, you can prepay those.
Oh, really? Okay. That is.
So I've had clients who had too much seller credit, and we've paid for 6-12 months worth of condo fees.
Yeah. And that is a great strategy. And for people to understand is that if you are in a situation where there's more money left over at the table, that money doesn't have to go somewhere. Making sure you are working with the right people that can map out a plan to help you with your own personal success. And so in this case, 12 months of condo association fees is huge.
It's huge. And it's
money left over.
A little bit of money left over. But I think the more important thing is having a lender who's going to know that you have too much credit before 24 hours before closing.
Exactly.
Because when you hit 24 hours before closing, everyone's running around being like, how are we going to spend this money? And, we pride ourselves at First Savings. We start the process a lot earlier, getting the closing disclosure finished. And so we sometimes hit these things where I say, oh, we've got $1,000 or $1,500 left. I can notify everyone saying, hey, we've got $1,500 left. What do we want to do? Do we want to do this? Do we want to do this? Do we want to do this? Giving different options. So what I would say, going back to our conversation, is as a repeat buyer, you have a ton of options available to you. And so don't think if you've owned a home in the past 3 years that you can't buy a home at the moment and not have down payment assistance, because there is plenty of down payment assistance programs out there for first-time home buyers, repeat buyers.
Perfect. And you know what? I think you have summed it up 100% for the purposes of this conversation. So everyone out there, if you haven't already gotten the clues that have been dropped here, reach out to JD at First Savings. JD, where can the people reach you?
Sure. They can reach me at dmbmortgageguy.com. Email address JD at first spelt out savings with an s.com, or 703-564-1746. And what I tell people is the first step I usually do is just a conversation. I don't believe the pre-approval is the first step. I believe something called pre-qualification is the first step, where I ask some stated income, assets, debt to figure out what you can qualify for. what to show you what you can qualify for at the moment. If that's not where you want to be, let's come up with a plan. Pay down some credit card debt, maybe save some more money. Let's figure out a way of getting you into a home whenever you need to, without necessarily pulling your credit. So lots of different options available to you, but you will have no options available to you if you don't have a conversation. So that's the key to this whole thing, is you don't have any options if you don't have the conversation, and the conversation costs you nothing but time. And so spend the time, because it could be the difference between you being a homeowner in 2021 versus being a homeowner in 2024, 2025.
Yeah. And who knows what prices are going to be in 2020.
Absolutely. They're only going up and up and up in our area.
Yeah. My favorite is when millennials tell me that they're going to hold up on the search because they think prices are going to go down in a couple of years in DC. And I'm just like, okay. When they do, I don't want to be here.
Yeah, my response to that is also, okay, great, the price will go down, but where's the interest rate going to be? So like the cost of your money in this. And similarly, I think a lot of times people are like, I want to wait till I have 20% down. No, by the time you wait for 20%, your 20% will probably only be equal to 15%. And the interest rates will definitely be up. So it doesn't make sense. Mortgage insurance, well, everyone says is evil and bad and stuff like that. It is your way of getting into houses now. And the cost has come down so dramatically over the past 3 years. So I would say definitely look at what you have. Maybe you have to borrow from your retirement account. Maybe if you have to use one of these programs, definitely tons of options out there. But again, you don't know what you don't know. So if you don't ask the questions, you don't raise your hand and say, hey, I want to have a conversation, you're just going to be looking at the myths and information of other people on social media and on the web.
Exactly. So make sure you reach out to JD at First Savings, because he, if you haven't already realized, is going to be a wealth of information, not only get you pre-qualified, but to make sure that you have the right plan in place, and to make sure you have the pre-approval and the necessary strategies as we maneuver the ecosystem that is real estate. I am Brandon, your trusted realtor. I want to thank you all for tuning in and staying in tune. If you haven't done so already, make sure you like, subscribe, and hit the notification button so you can stay tuned in and in tune to the latest and greatest realty here in the DMV and everywhere else. Take care, and I'll talk to you soon.